So, today, January 30th, we just got announced for our new chairman of the Fed, Warsh. It came to a surprise to a lot of people. It was a surprise because of his past stance on economic policy. On paper, he's not somebody that it seems like Donald Trump would bring in, but he brought him in. And I want to talk about that, what that means to you and why this is important to you and your portfolio and you spending money, walking around on the street, spending money, how this is going to affect you. So he picked this guy, Warsh, and it came as a total surprise because you're probably seeing the headlines that says that he's very hawkish. We need to talk about what hawk means and understand what the opposite of a hawk means. In economic fiscal policy, you have this spectrum of you can be either a hawk or a dove. And the way that our fiscal policy or economics work in this country is you have inflation, and the way that the government controlled inflation is through the Fed funds rate. Okay? If inflation is high, then that means there's too much money circulating in the economy. In order to pull back some of that money, they'll raise interest rates. When they raise interest rates, that tightens the monetary policy. So it is, without going into the weeds, we've talked about it on this channel, but without going into the weeds, it essentially lowers the amount of money that's in circulation. People can buy less, they can do more, they can do less with it, and so that will tame inflation. So someone who sees a person who's in power in that job and they see that, oh, inflation is high, and they do everything they can, even increase Fed funds rate, they focus on inflation and don't care about anything else, they're considered a hawk. What are the other things that they could care about? Okay, when you raise interest rates, it can have a lot of effects on the economy. People lose jobs, people can't buy homes. It could do a lot of stuff. It just makes things a lot more difficult. And so someone who is a hawk says, listen, I don't care about any of these short-term things. I'm going to do everything in my power to get that inflation down, which means increase rates. We saw it in the end of 2022 when we had this, right before that, we had this period of really long term low interest rates. And then once inflation started getting out of control, why was inflation out of control? Because we had COVID. And because of COVID, the government pumped trillions of dollars into the economy. So now, hey, there's a lot more money in the economy. We have higher inflation. And so it took a little while, it took 2 years for us to wake up oh, we can't do this. Then the Fed stepped in. Okay, now we got to start raising interest rates. All right. And when the Fed, every time they set interest rates, which comes every 40, 45 days or so, 40, 50 days, they put out a statement. The statement is more important than the rates, okay? They'll put out an official statement. In that statement, it tells you everything you need to know. This is the crazy thing about finance or being in this space or I am an economist. I consider myself very much so an economist. You get so much of a competitive advantage just by reading that one statement. It is so bizarre how many Wall Street writers will write articles and so much stuff gets pumped out and they don't even read it. The statement is only 2 pages. It's not even long. So in the statement, he said the first time when he raised that rate, September 2022, he said, I think it was 2022, not 2023. Pretty sure it was 2022. Yes. He said, we will do everything to get interest rates down to 2%. I mean, the language was so strong. Here's the other thing. The Fed is always so intentional with their words. You don't know a more intentional, the only other source that's more intentional with their words is the Bible. I'm I'm serious. Like, they're so intentional with their words, okay? Because they know if they use vague language or if they use the wrong language, the markets will react. And their job is not to control the markets. Their job is simply to control the money supply. That's it, okay? That's what it's supposed to be. This is why we've loved Jerome Powell for so long, because he understood his job. My job is this and this only. I don't care about nothing else. I'm going to miss him. Anyways, so they were so intentional with the language and said, we don't care. We're going to get it down to 2%. Okay, so I already know. When they say language like that, know that, first of all, our interest or our inflation was something crazy high, 6, 7, 8%. It's not going to come down to 2% overnight. Okay. And then it was so weird because, like, right after that, people, Wall Street was betting that, maybe the next one he'll lower interest rates again, or I'm like, no, 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 we're about to go on a crazy, like, we're about to be out of here. Okay. If he could, he probably would have took it up more because they usually raise it a quarter of a point at a time. Very rarely in history you see them raise it or lower it 50 basis points. He probably wanted to go two, 2 whole points, right? So, okay, I knew we was going to be on an incline because of the language was so strong, all right? So someone like that and how he stood his ground, no matter what, that is a hawk, okay? That is a hawk. Where people were yelling and they were upset and they were like, oh my goodness, we're going to lose so many jobs. We're going to lose this. This is going to, and he's like, listen, I don't care what y'all think of me. This is our job. We're going to do everything we can to get it down to 2%. Even so much so to the point where during that time period, you had a couple of banks collapse, 3 banks collapse, and it was a big deal because we hadn't had any banks collapse in a very long time. There was a run, for those of y'all who don't know, there was a run on the bank. Everybody started pulling their money out. That was the first big sign that we in a jam, we in a major jam. This whole thing is falling apart, okay? I just knew because of that he was going to stop on the rate hikes. I just swore that next, I'm like, no, he gonna chill. He did not chill. So that's how I knew how much of a hawk he was. Okay? So now here we are. Fast forward, interest rates are high, mortgages are high, people can't afford homes. We got this home affordability issue. I just remember something else I want to talk about. Come back to that in a minute. We got this home affordability issue, and Donald Trump gets back in office, and he's trying to control Romy Rome. Jerome Powell, for those of y'all who don't know. I call him Romy Rome, okay? And Romy Rome is like, my job ain't even to talk to you. Why are you talking to me? I don't want to talk to you. I'm not going to do what you want me to do. And he wanted him to step outside, even though our CPI has been 2.5%, 3%, maybe even more, and cut these rates, and he's just not doing it. He's not. They just don't like each other, and I believe that they don't like each other because the universe that you live in when you are friends or associates with Donald Trump is this power game, and the power game is all about leverage. How can I get you to do what I want you to do? And the only way you can do that is if you have leverage over someone. He doesn't have any leverage over Jerome Powell. Jerome Powell has no political aspirations. He don't want to do nothing but do his job. The thing that I see in his eyes, this is just me personally, the thing that I see in him is he likes the system and he wants to keep the system what it is. I don't know when his birthday is, but that is a very Taurus thing. We just like systems and rules and we want to keep it that way. Because then I can go off and do other things. I got this under control. I know what these rules are. I want to do other things with my brain power. Okay, so whatever. That's neither here nor there. All right, so you would think because we see how Donald Trump is doing all these other things, he likes to put people in place that is on his side, that's going to do what he says and all that stuff, which is not an unusual human desire. he puts another hawk in there. Now, before we talk about hawk, this next hawk, let's talk about what a dove is. A dove is someone who, as it pertains to economic policy, is someone who says, hey, we may have an inflation problem, but if we raise rates, we're going to have this short-term problem. We're going to lose some jobs. Homes are going to be unaffordable. So they're less married to the long term, which is controlling inflation, and more married to the short term, which is maintaining a very comfortable economy. You have to pick your poison, okay? So we thought, because Donald Trump is very dovish as it pertains to all of this, even just recently he just did I don't know, he was on the news for something. And he said that he talked about tackling the home affordability crisis. He said, I don't want home prices to come down because the people who own their homes, they're going to lose a lot of net worth. But the way we do that is through interest rates, getting these mortgages down to new people that buy homes, making it more affordable. Okay, so he is very dovish. All right. Then he goes and puts this other guy and is supposed to be very hawkish. So we're going to see how that works out in a minute. I'm going to steer aside because this has been on my mind. I haven't been able to share this. I've been meaning to put it in our private school community for the Profit Door members. But it's just been so much stuff to talk about. Let's talk about affordability, where I'm going to talk about specifically the Philly real estate market. And this may be a lot of cities. Okay. This is so bizarre. Philly real estate market is a SHIT show. Okay. So not too long ago, the mayor signed something where they're going to spend $1 billion to put 30,000 new units because there is a housing crisis. They're trying to tackle this problem with 30,000 more units because there is a housing crisis. But at the same time, landlords who have Section 8 PHA, there is a shortage of tenants. My mom, who handles stuff for her partner, say partners, her boyfriend, whatever your boyfriend and girlfriend when you 66? Shout out to my mom, she's 66 today. I don't know what you call it. They not married, whatever, her partner, okay. So she handles a lot of his stuff. And she was telling me that, so every month they do a fair down at PHA so that tenants can get matched with landlords. And to make a really long story short, it was like a bunch of landlords there and like 4 tenants.
So it begs the question, is there truly a housing crisis?
It's not a housing crisis. I'm going to tell you what type of crisis it is. So let me kind of back up. Over the last couple of years, a lot of new units went up, luxury units, and they're not full. And so what they've been doing is putting Section 8 people in it. So Section 8, as a quality of a unit, went from being like, oh, this is a nice place, to now you can get something really, really luxury. So you got all of these units for Section 8 and not enough tenants. And it's just really gotten bad. Now, my mom and her partner have been together, whatever you want to call it. Shout out to Mr. Rodney. They've been together for like 20 years. And so and my mom has been like his admin for forever. So even before I got in real estate, I've been seeing the progression of all this. I don't want to put all his business out there, but he's got a significant amount of units. Okay. So I've heard the stories about what's going on. He went from always being fully occupied to super struggling. And this is new. Okay? Not only that, y'all forget, not y'all, but don't forget, I ran the largest real estate community in Philadelphia. So I see what everybody's dealing with. People are really struggling with getting tenants in their units. Why are we adding more units? Okay? The problem in the city of Philadelphia, this is why you need business people to run governments. I know some of y'all are really hating me for saying that. The problem is not necessarily just a housing crisis. The problem is an economic crisis. People don't make enough money to live there. You don't have enough skilled laborers, people like it the money. I always say this. I've been saying this for years. Think of the city and having walls. There's not enough money within the walls. You're just shuffling around a little bit of money. And then outside money is coming in building stuff. But the money that you're bringing in to build stuff is not enough to sustain. You're just building. And then those people, they live over in New York. They live overseas. And it's not like they're spending their money within the city, creating new jobs and all of that stuff. And so these are the types of things I'm comparing these two scenarios around fiscal macroeconomic policies and down to the city, because as an investor, you need to be able to understand how to look at both levels. Right? You need to I talk a lot about macroeconomics, but you got to be able to look at, and not necessarily micro, because even when you get on the city level, it's still macro, but you still got to be able to look at it on a local level, because these problems are very, very much so confined to Philadelphia. So you need to be able to look at that as well and see what's going on. And a lot of you are investing in real estate. You need to look at this stuff when you're choosing the city that you're investing in, because it's like these closed, when they talk about flat earth theory, and it's like, no, we live in a closed, a dome. These cities are closed dome. They're closed, right? And so you got to be thinking about this. Like, look at the fiscal policy within the city. Who is in office? Do they understand what the city needs? What's going on? It's such a joke to me. I like, why would you put $1 billion to put 30,000 new units in there, but not tackling the root of the problem? That's crazy. That is insane. But I know where it comes from. This, politicians, especially on a local level, they don't even realize that they're so heavily influenced by big business. They don't even know it. And so somebody on somewhere that works for some developer whispered down the lane, whispered down the lane, whispered down the lane, and then it became a thing, and then it took on a life of its own. But like, I don't know, somebody correct me if I'm wrong, if I'm missing something. But you could just talk to any landlord struggling to get tenants. Struggling. And the tenants that's there, guess what they're not doing? Paying. A lot of them. A lot. When I say a lot, I mean a lot. So we're at 30,000 more units? What I would have did is I would have took $1 billion and did some tax breaks to bring jobs to tell companies to put their hubs. Like, that would be my biggest thing if I was mayor of Philadelphia. Spend a whole bunch of money on physically cleaning up the streets because of that broken glass theory. You know about the broken glass theory? Okay. It is filthy there. And crime, they luckily they had a great year with low crime, lowest since 1960, low murders. But it's still very crime-ridden city. I would spend a good amount of money physically cleaning up the streets. I pay all the influencers to do videos and campaigns about, like, hey, pick up some trash. Let's clean the streets. That changes everybody's mindset. I do some tax breaks. And you got to do something about the schools.
So you've given given
I don't want
good
to talk about that no
advice.
more.
You've given good advice from a government perspective on what they need to do to kind of shift from where they are right now. But when we're talking to the investor at that level, when you look at a market like Philly, is your recommendation to look outside of a market like Philly for right now, understanding that it's not aligning from a political standpoint? Or do you advise, instead of independently purchasing from that perspective, more so leaning towards private equity in situations where your local markets don't align?
That's a really good question. Okay, so if I'm a real estate investor in Philadelphia, is that okay? If I'm a real estate investor in Philadelphia, what would I be doing? I would, number one, focus on luxury flips, and I would do apartment buildings outside of the city, like just outside of the city. What happens with like suburbs, right? The suburbs just get what they can get. People gotta live there, but people are going to want to live, people need to be able to afford to live in these places right outside of the city where the cost is low, so like apartment buildings, but also you're not at the behest of that government. So I would find municipalities that have friendlier landlord tenant laws and do apartment investing outside of it, because people are going to need a place to go, but it's the SHIT show in Philadelphia. So that's what I would do. Now, if I'm like, hey, if I'm thinking outside of Philadelphia, like, hey, okay, I'm trying to figure out what to do with my money just in general. You mentioned private equity. Private equity is always, always a good answer. Do you know, this is about to go left a little bit. I have this idea where it's not necessarily an idea. I would start like a really small, if I had time and space, I would start a small private equity fund that finances poppy stores or that invests in poppy stores. Um, all of the resources that in, in economics we call it inferior products or inferior services, because the city is not doing anything to change the economic issue. It's going to be a poor city for a while longer until they get some new policy changes, new thinking, new everything.
For those like myself, can you give us a definition of what a poppy store is?
Oh, you know what a poppy store? Poppy
And
store is
apparently, poppy store is an actual brand name. So when I googled
it's.
it, it took me to a child's clothing store. So please give us some
Oh,
context.
that's funny. I'm sorry.
If
Okay.
anybody hit the Google like I did, that's not what she was talking about.
A poppy store is so it's a very northeast thing, Philly, New York thing, where a poppy store is a very local convenience store. So like think like
Like a bodega.
a bodega.
Okay.
Yes, a bodega. And the reason I'm saying this is because like you can get things convenient, you can get them fast. While conditions are what they are, you're going to have these food deserts. That's always a consistent issue. Food deserts, and they're not doing anything to improve the issue. Nothing. So I think the win, I mentioned this before, the win is to find these local opportunities. As you're looking at these local opportunities, look at what the politicians are doing. They always have an agenda, and a lot of times the agenda is publicized. Like, what are they trying to do? But specifically, don't go look at the agenda, go find the agenda that that particular cabinet, like whoever that mayor is, has in office, because sometimes they'll have a plan that's like a 20, 30-year plan, but this mayor has not, they don't have nothing to do with it, so they might not even be doing anything to like really further this plan. So find out what's important to them, find out whose hands in their, who got their hand in their pocket, right? Like find out what businesses and what corporations they align with, find out what their agenda is, and make some hypothesis about the direction that you think the city is going in. Could be up, can be down. I don't necessarily, I'm not saying that the current mayor is bad for the city. I want to make sure that I'm steering clear of that, because I'm sure there's a lot of things that she's doing that's very good for the city. But in terms of the city's big problem, which is high crime, poverty, $1 billion on more units, that's scary to me. $1 billion on more units? I would do something to try to make it so that the people that are there can afford the units. Because the units exist. I got 2 units right now that's been sitting, and it's a gorgeous place. Everybody I know that's selling properties, they're not moving. They're struggling to sell them.
For years, we've always been told that for those that didn't grow up with money or are on the track to really building wealth, the answer has always been get into the real estate market, get into the real estate game. Given where we are in today's landscape, is that still the advice for wealth generation that you would suggest?
That's such a loaded question, because that's why the Prophet Door started, right? Like, that's a loaded question. That's why the Prophet Door started, because I think we had made an idol out of this whole concept of get into the real estate game. I'm not saying don't get into the real estate game, absolutely, but you have to understand what you're getting into. You're not getting into the real estate game, you're getting into the investing game, and you cannot look at it in a silo. And so when you start to look at it in a silo, then you don't know how to pivot or adjust your investing strategy. So you have to be able to look at the entire scope versus just no understanding how to analyze a deal. So, like for instance, right now in the real estate influencer world, y'all know I did my post over a year ago, and I was like, yo, I'm not having fun. Actually, end of 2023, I did a post saying, hey, I'm selling my single families and getting into apartment buildings. So I already saw all of this, but now all of the influencers, they are literally making posts like flies, talking about, like, one guy, he did a post and he was like, I had 40 units and I still not making a whole bunch of money, and nobody talks about this. No, yeah, I've been talking about it. Then it was another guy. He's not an influencer. He was on a podcast. An influencer reposted it, and the guy that was on the podcast was talking about how he had hundreds of units and wasn't making a ton of money, right? And the reality is, those situations is not just because real estate is bad or real estate is good, but it's because you're not looking at the macroeconomics to understand what the next play is. The next play right now, I'm going to keep saying this: luxury flips
Outline what
and
luxury
apartment
flips are
buildings.
so people fully
Those I'm gonna say
understand
no
what that is.
luxury flips. I'm gonna specifically say it depends on the market, right? So like any because owning a home is going to be a luxury, we have an affordability issue. So the only people that are going to be able to own homes are people that like nice things, that can afford nice things. So in a market like, let's say in right now we are in Alpharetta Milton. I think some nice homes here,
Yeah.
right? So something 500, $600,000, maybe even, I think you got some nice homes at 4, right? Like that little starter pack home flip, you're gonna be you're not gonna have a whole lot of fun. 500, 600. The higher you go, the better. Like right now, my homegirl's doing. I made a post about it. I said I thought that the price of the home was gonna be $4.5 million, $2.5 million. She, she'll homes like that is gonna be. She'll be fine. People in that area will be fine. Somebody who. So this is another thing I've been wanting to talk about. Right now, you're going to have 2 Americas, maybe even 3, and you have to look at them in silos because you have these divides. And the people that refuse to look at things in silos are the people that are going to lose. Okay? Before,
Unpack that.
you can look at the American economy. It's going to be three Americas.
Okay.
There's going to be average, everyday Americans who, when you look at, say, like, for instance, affordability, inflation, those things affect them. And then you're going to have wealthier Americans, the stock market, those things are going to affect them. Inflation is not going to affect them that much. Affordability, not going to affect them. They just got to buy a babier mansion, right? And then you got institutions, big business, oligarchs. And you know we're moving into that. I don't even want to talk about the conspiracies about how, like, the government is going to now be run by corporations. That's like a whole thing, that the world governments are going to be run by
I
corporations.
think if anybody has questions about that, they should look at China.
That part.
Literally ran by corporations.
That part. Institutions. So when you get these numbers, these economic indicators, they're not going to tell the story across all three sectors, whereas in the past they did. Which is why we're looking at economic indicators and it looks like mixed data.
Mm-hmm.
It's because we got these three versions of America.
Mm-hmm.
And you have to be able to understand what economic indicator is assigned to what version of America
And where you fall.
and where you fall. For sure, for sure. And how it affects you. You know, I was getting to a point. You asked me a question about, okay, luxury flips,
Mm-hmm.
that middle group, they have to be serviced.
But what is a luxury flip?
Like, you buy a home, you see it's distressed, and you look around like, oh, everybody else's homes is nice around there. This home is distressed. I can get it at a discount. You put some money into it, and then you flip it, and you make money on the equity the forced appreciation.
So to dial down a little bit more into that type of example, what you're looking for is a high net worth community that
Yes.
has distressed properties within
Yes.
it. Okay.
Yes. There's always going to be opportunities. You just got to be.
More strategic. You're not looking for those areas that are on the verge of gentrification where the entire block needs elevation. That's not what you're looking at. In this season, you're looking for areas that are already there. The median house scores are already where you want to be, but you're just finding those individual properties. Okay.
Yes. But let me be clear, because you said on the verge of
Mhm.
gentrification. There would things change. You're always going to find some area was like, oh, this is on the verge of gentrification. So, but not something that's like, oh, this is a C and D class neighborhood. I'm going to do a flip here. The affordability is not there. It's just not there. I'm not saying it just to say it. It's on the news. Your boy, whether you like him or not, he keeps talking about it. Affordability is not there. Owning a home will be a luxury. Let's give the people who want luxuries the luxury. So if the affordability is not there, let's move on to the next class. Where are people going to go that can qualify? Apartment buildings, until they fix this problem. Because we have a dichotomy right now in housing. Last 50 years, we let home prices run amok because it was just like, oh my God, this is great. Home prices are going up. And everybody hedged their life on real estate goes up an average of 9% every year. Okay. I didn't think about the effects of that.
COVID times where so many people were purchasing property above market value. And I thought that was the craziest scenario. Like, why would I spend XYZ over what the asking price
Because
is?
interest rates was low. And they just wanted to lock in at an interest rate. And the Fed pumped all that money into the economy. So people would just like had money. Like, I'm going to put a cat sock making course out. Did 100 grand. Make socks for your cats. Everybody was bored. $500, I'll buy a cat sock. I ain't got nothing to do. I'm gonna learn how to make some socks for you. Mittens. Mittens. Let's make some socks for you. We just got a new stimulus check. All right. So yeah, that's where that's hitting at. All right, so I'm going to come back to what to expect from this new Fed chairman. It's a wild card. I can't even really call it. I don't know. My guess, my guess, my heart of hearts, even though he is termed as hawkish, right? They have identified him as hawkish. I think he's going to behave very much so like a dove. When he gets in, the first thing he's going to do, he may like for the first session keep interest rates steady, but they're going to keep trying to keep those interest rates low as possible, which kind of ties into the weakening of the US dollar. Kind of ties into the weakening of the US dollar. So I talked about this on Instagram. Shout out to my little viral Instagram post. Okay. We're going to step aside and talk about Japan. Okay. I know, great, right? So for a long time, Japan kept their interest rates very low, and they intentionally kept a weak Japanese yen. So now here we are. Our U.S. dollar is weakened. It seems like it's a part of the plan based on what Donald Trump. I'm tired of saying his name. I'm gonna start calling him DT, okay? Based on what DT has said, it's good because it is good for exports, which goes back to his promise of make America great again because we were a great exporting economy a long time ago. And so on paper, that is their argument about making America great again. We were exporting things. Exports are always good for countries with a weak currency. All right? Okay, follow me. Follow me here. All right. But some people are like, hey, US dollar can't be weak because do you know that 90% of currency trades involve the US dollar? It is a world benchmark. Okay? A world benchmark. So if we have a weak dollar, that changes the whole dynamic of everything. Right? Okay. Which brings me back around to my point because now economists, they're all fighting about whether this is good or bad. And I'm going to say to you neither because we're going to go back about 3 episodes when I said we about to move away from fiat currencies and it's all going to be tokenization. So it doesn't matter. Doesn't matter. Doesn't matter. Okay, yeah, we have so this is how Donald Trump thinks. Like the DT. He thinks outside of the box. Hey, what if we have a weak US dollar? Weak US dollar means exports. Great. I'm doing my job, my promise of making America great again, based on the stuff that's on paper. Right? We got exports popping. Okay. Yeah. What are all the ways that we benefit when we had a strong dollar? Doesn't matter because all of this stuff is going to be based in crypto anyway. We're going to replace that benchmark currency with crypto anyway. But let's get everybody hooked on our exports. This was the plan. Is it a stretch? Sure. Is it going to work? Who knows? But I'm just letting y'all know that the plan doesn't matter whether we have a US dollar or not. Because again, I'll go back to what I said before about the New World Order. One of the things is these fiat currencies are going to go away. Now, what do? This ain't investment advice. I'm going to be clear about the real estate thing ain't investment advice either. Do what you want. Talk to your financial advisor. What is the play? Start dollar cost averaging on Bitcoin, Ethereum. They're about to do a new oil currency. It's supposed to come out February 1. I don't even know if it's a theory or not. Some places it's like it's real. Some places it's saying it's a theory. I don't know. But definitely dollar cost average some Bitcoin. And if you want to take it a step further, um, do one of the U.S. based tokens, Trump coin. This is not an advice. Because at some point it's going to be like, yeah, we're only taking Bitcoin. Your dollars, oh, you can buy some corn. You can buy some GMO corn. You can buy some GMO corn. What else you can buy? iPhone 1. They're going to let you buy like bare bones necessities. You can buy some GMO wheat. You want to buy some mercury salmon? Because let me tell you what I do. I go to Whole Foods and I get me the EU salmon. I don't buy the regular salmon. Ooh, I get me some EU salmon. Niggas say US dollar is only accepted for regular frozen salmon. And genetically modified corn. Would you like some? Would you like some? I'm joking. But if you're interested in investing in apartment buildings, me and my partners, we run a fund called Invictus Elite, and we are taking on investments. We are investing in apartment buildings in Atlanta, Dallas, and Houston, and assisted living facilities in the Northeast, all where we're adding mental wellness amenities. If you are interested in investing and getting a 2.5x equity multiple, a 20% IRR, let me know, and I can give you a whole pitch and come on a winning team. That's it. That's all there is to it. You ain't even got to be an expert. I want to show you this expert team that we have. Let me know. And it's just my thoughts. Okay, if you are interested in learning more, join my 7 Hidden Wealth Keys webinar where I give you mad game on how this stuff works and how you can educate yourself. I'm not here to give you advice, but I am here to teach you how to think for yourself, how to read between the lines. You cannot survive in this new economy, whatever this new economy is. You cannot survive without thinking for yourself. Otherwise, you're going to be an NPC. Because I always say it's 3 types of people in the world: a GP, LPs, and NPCs. And if you don't know what an NPC is, go look it up. And I don't want that for your life. I need you not to be an NPC, okay? 7 Hidden Wealth Keys, the link down below. See you soon.